Welcome to the India Growth Mission Council. I'm Tamanna Inamdar. For the longest time, for several decades in fact, one of the biggest challenges in terms of growing India's economy was how to improve the quality and quantity of Indian exports. While we had a lot of abundance of raw materials, agricultural products to export, the problem always seemed to be high quality exports. Has that truly changed? Today on IGM, we're talking about what is being called the Indian export revolution. In fact, the data for the financial year 2022, that's 2021-2022, pegs Indian exports at the highest ever. March data has come in at a phenomenal increase of over 40%. So what really is going on? What's the story behind this push for exports? Remember, it's also coming at a time when our imports are getting more expensive with higher crude prices. So your trade deficit numbers may not look as good as they possibly could. But there is little doubt that the quality, quantity and spread of exports is improving. To speak more on this, I'm joined today by A Sakthivel. He is the president of FEO, that's the Federation of Indian Export Organization. Upasana Bhardwaj, senior economist at Kotak Mahindra Bank, is joining us on the show today. And Mr. Ajay Dua, a former secretary with the Ministry of Commerce and Industry, Government of India, is with us on the show. Welcome to all of you and thank you so much for joining us today. Mr. Sakthivel, let me begin with your take on the overall figures we've talked about. What has changed in India's export story?
Yeah, I should say that the positive sentiment towards India is the very important factor. After the corona, the people of the world felt that India is the one country that they want to buy goods from us. I don't want to talk about the anti-sentiment, but the positive sentiment towards India is so good because I could feel that sense of customers when I visited along with the Honorable Commerce Minister to Dubai and as well as to Australia. So this is the important factor for growth rate. That's what I believe it. And of course, it's everybody say that China plus one is every customer think it's important. So China plus one also another thing. Then another important thing is that in the last 75 years, no prime ministers addressed the export councils or export association or exporters of India. Not only that, he has invited 200 ambassador and consul generals all over the world. 200 foreign offices of India was participated in the Honorable Prime Minister's addressing. Afterwards, I could see the drive from each country from the who were representing our India. So they started calling Shakti, what we have to do. Can we have a VC with the important buyers? Can we have a marketing strategy? What you expected to do? So this was never happened in the history of, because I have been the expert for the last 40 years. So that's why also one of the very positive move by the Honorable Prime Minister of India. So after that August, I think it's the 6th August he addressed, then that momentum has picked up.
So that's great, Mr. Sakthivel. I understand the push on exports from government and I mean, successive governments have always had a push on exports. But at the end of the day, it depends on what the buyers want and where they see the best deal, right? How has India become an attractive alternative is what I'm trying to understand. For a long time, when the China plus one formula was being talked about and in the beginning of COVID-19, I remember quite clearly there was a worry that countries like Vietnam, Bangladesh, for example, in the textile space, were stealing a march over us. So if you can come into a little more specifics of what has changed and in which sectors.
I said most of the sector it has been plus. Why? Because I told you that whether the buyers wants to buy it or not, the customers feel that Indian goods should be, they want to buy the Indian goods. I said that positive sentiments towards India's last 2 years have increased. Even though the Corona time also we could able to do exports because of the customer scene. Whatever buyer wants to do, but it's all depends upon the customer's need. Now, the change of sentiment towards India by the customer is the most important thing, which I feel for growth rate is the most important thing for us.
Okay, so change of sentiment among customers who are demanding Indian goods is what FAO is saying. Upasana Bhardwaj, let me come to you for your understanding of what has, qualitatively changed. Are we seeing more finished products in the export basket? Is that what the quantitative change is? And what do you see beyond the figures that we are hearing from the ministry?
Yeah, so there are a couple of things I'd like to point out, Tamanna. One is that the beginning of the improvement in export sector probably the grounds was laid around 2018, which is linked to China Plus or whatever we can say. But the three Ds: the diversification, deglobalization, and de-risking. So basically, from the time when the US-China trade wars had started in 2018 to the onset of the pandemic, all of this really made the whole world realize the risk of concentrated risk that the world was bearing. And I think that is one of the beginning factors or foundation which has actually pushed to customers, widening their base. That is one important aspect to keep in mind. The other is, of course, that has led to a very broad-based improvement across all sectors in India for exports. So I think if we look at the breakup, then earlier there used to be just 2 to 3 sectors which were the focal points for the exports. Now we see engineering goods is doing super good. We are seeing, of course, chemicals has taken, improved in terms of market share globally. Reasons could be various because China has clamped down in terms of environment, clamped down, etc. But the fact is there is an increasing market share for India across various sectors. Agricultural exports are doing stupendously good. So we are seeing a very broad-based pickup in exports. Having said that, I think without taking away the sheen from the export progress that we are seeing, we need to keep in mind that it is not just the volume impact, it is also the price impact. The elevated commodity prices over the last 1.5 years or so has also pushed the export figures much higher. And obviously that is reflecting in our import figures as well.
Yeah.
But the fact is, even in value terms, our exports have started hitting higher because of elevated commodity prices. And that is something which we need to keep in mind when we just, determine going ahead, depending on how the commodity outlook would be, we would have to take a call on what will be the possible growth in the export sector over and above the base that was, which is already built up pretty high.
The export numbers are also looking robust because everything is costing more. So an all-round inflationary pressure is improving exports as well. Mr. Dua, I just want some context here. The problem for Indian exporters traditionally always has been, how do you be as price sensitive, as competitive on cost and quality with the manufacturing hub of the world, which is China? That has always been the endemic issue. So even as the China plus one, maybe courtesy Mr. Trump, did begin 2018 onwards, has India managed to cross that hump? Has India's export sector managed to cross that speed breaker?
Tamanna, it's a slightly complex issue, as the other friends have mentioned so far. Yes, a degree of apathy towards China, which has cropped up post or towards the fag end of the Trump era, has continued because of the Chinese geopolitical position, whether it's in the South Pacific area, vis-a-vis India, or its president going very aggressive on BRI, etc. So there is definitely a degree of look around by the world, the dominant players in the world trade for. Let's not deny that fact at all. But that's not to take away the credit from the Indian exporters, who have done exceedingly well last year by roughly increasing the exports by 37% in 1 year. And even if we were to take the conservative UNCTAD estimates, even that is 25%. Certainly what was just pointed out by Upasana about the price impact. that some of these are because of higher global pricing of the exports? Yes, to some extent, yes. And that's reflected very clearly in the import bill going up to $600 billion or beyond 600, and there being a gap of $192 billion, which is much greater than last year's, because the prices of both exports and the imports have gone up, particularly for us, the commodity trade. But let's give credit where it is due. We have diversified our exports to much beyond the so-called focus areas or the focus markets or the focus industries. This year, the growth has been, as my old friend, Mr. Sakthivel said, we have seen the improvement in 21 sectors out of the 168 commodities which we generally classified as our exports. And in each one of these, the growth has been more $1 billion, which makes it pretty high. What my concern is going forward, if I might take this opportunity to say that, is that the global trade during the current year is likely to shrink for the geopolitical reasons which we are witnessing. And Sri Lanka, which is important to us because not only for our exports, but also a lot of our industry has set up either assembly centers there, or some kit making centers, etc. And they have clamped down on imports because of their own compulsion. So we might see some suffering there. We might see some suffering in our gems and jewelry trade because of the high dependence upon the El Rosa diamonds which come from Russia. And those are likely to be restricted. If that happens, gems and jewelries and petroleum products, which continue to be number one and number two in our list of exports, we would see a bit of a problem there.
Let me just get a quick response from Mr. Sakthivel on these 3 points, Mr. Dua. So one is the impact on global trade volumes because of Russia, Ukraine. Second point is, a neighbor like Sri Lanka, who we export a lot to, has run out of money to pay for anything. Plus, we've set up, our industry has set up hubs over there. And then the specific point about gems and jewelry and petroleum exports, petroleum product exports, which are crucial to us. Your response on all three, sir?
Actually, if you see in commodity export also, we have a very positive growth. Petroleum products about 57.5%, cotton yarn, fabrics, and alum products about 52%, rice 50.03%, cereal preparation miscellaneous processed item about 48.5%. Then if you take the manufacturing sector, engineering goods, it's about 41.8%, coffee is 37.5%, electronic goods 33.8%, organic and inorganic chemicals 32 points, mica, coal and other minerals, including processing.
That's true, sir, but we're talking about these 3 specific points that were raised. Is there any response to that you would like to add?
What Mr. Dua was saying about the diversification of the exporters, that is true that we are looking for, from the focus product, we are also diverted to the spread our wing to the other product, and that demand we have find out with the HS code wise. I should appreciate here our Commerce Secretary, who has given this target to each council, HS code wise. Yes, given these are the HS code which we are weak, and this is the HS code we can do more. So that has helped us a lot, all the councils. And not only that, then the government also, when the Corona time comes, then a scheme like EGLJ scheme given for the 3rd time also, that also helped us in the finance.
Sure.
Because,
sir, but my question to you specifically is, what is the impact you foresee of the geopolitical tension on Indian exports? Can we continue at this clip if global trade itself is going to be impacted?
No, see, the thing is, again, if you see the global trade, last year it grew by 25% itself. International trade is grew by 25%. Even this year also, we expect that there will not be big growth rate, but the same growth rate should be there internationally also.
Okay.
One fact, of course, Upasana said about the price hike of the raw material, but still the people in the world now looking for a growth rate in the sense their consumable items are increasing day by day, and which are India is producing those items.
All right. Upasana, just your take on some of the points that Mr. Dua has mentioned, because something has clicked suddenly as far as Indian exports are concerned. It seems to be working in a more cohesive manner. But what about these headwinds which we're seeing in terms of global demand maybe shrinking due to the Russia-Ukraine conflict?
Absolutely. I think we are also forgetting one more aspect, the aggressive monetary policy tightening by the central banks globally. That too is eventually going to be weighing on global growth. There's a lot of front loading that is happening. So all of these factors taken together does point to significant headwinds on the export demand going ahead. I think somewhere we will see a slowdown in the monthly run rate. Right now at $42 billion a month, this will not be sustainable, even though we do expect that the commodity prices will remain elevated just because of the supply chain disruptions that are expected to last for long. But despite that, I think the volume impact will take a hit towards the next few months, because clearly there are significant headwinds. So we do expect, yes, there will be pockets which will be doing well, but I think broadly on a macro level, I do see some headwinds on the export demand.
Talk about a different change in strategy that we have been using, and let me come to you with this, Mr. Dua, which is FTAs, free trade agreements. We have one with the United States, we have one with Australia, and we sort of put things like RoDTEP into the backdrop and decided to go ahead with FTAs in an increasingly polarized world. Is that the way forward?
Not the ideal way, Tamanna. I'm an advocate of free trade, because free trade over time has built up ever since we've had the arrangement with the WTO. We have seen the global trade rise much more than when we didn't have such free trade imposition. But having said that, we got to face the realities on the ground, which is that the world is no longer in favor of going ahead with free trade at the same pace as we saw in, say, for 20 or 25 years, largely because there is an apprehension, an unstated apprehension, that China has benefited tremendously because of it having been allowed to join the WTO, and China having built up, taken advantage of the free trade regimes which followed the WTO's coming into being and it making the rules, etc., for trade. But now that there is protectionism on the rise, and because of the geopolitical factors which we are seeing, whether between the West and China, between Asia and China, or it is even vis-a-vis Russia now, which have developed, and we don't know that for how long the sanctions would remain. It could well be much beyond the war, much beyond the ceasefire, because the impact of these sanctions is going to be much more effective if they are kept in position for a longer time. So seeing this, India is now accepting the situation on the ground and saying how best can it kind of navigate the scenario. And there, the new trade agreements, be it with UAE, be it with Australia, and several others which are in the pipeline. Some of them have intractable issues vis-a-vis our services, vis-a-vis our protection to agricultural products. But the low-hanging fruits which are available, be it in the agreements with the EU, with the UK, or even with the United States, I think some of them will materialize further. And let's go forward with it, because, all right, we believe in free trade. we are still the believers, but we do see that what is best for us in the current scenario is to go ahead and make better for FTAs. The CEPAs of the past with Japan, Korea, Thailand, or the ASEAN countries may have impacted us adversely to some extent because our exports didn't build up while their imports to us did. So, with taking due care for it, due care about it, I think going forward with the FTAs as we are doing is desirable.
Upasana, your take on the free trade agreement route that we're looking at right now, and how further do we need to go down this road? Also, if you can give us some context of which are the new sort of areas of export dominance that we have now entered into, which can cause a lasting change?
Well, Tamanna, maybe we are in the nascent stages at this point in time, but I would totally agree with Mr. Dua. Things are changing, and we will have to align accordingly. So, for example, I mean, there are expectations that new agreements will be reached out with UK, Canada, probably, and we'll have to look at the various sectors which can be given. But for Australia, for example, I think due diligence has been given to the dairy sector, from what I understand, and like that, we will be seeing reasonable, importance that will be given depending on the bilateral situation of which country, has an advantage and where we can really penetrate. So somewhere we will have to see how this really works out. But this seems to be the way forward in this current context, because clearly, the days of complete globalization seem to be over behind us, and somewhere we are moving towards a relatively more closed economy. All of them, all nations are moving relatively towards much more closer economy. And hence, FTAs, bilateral or multilateral agreements will be the way forward.
Last word from you, Mr. Sakthivel, on how you see the way forward. Will more bilateral agreements push India's export pitch? And what really can we do to involve those areas of industry which have not managed to shine in the export space so far?
Actually, this what Mr. Ajay Dua was saying, this CEPA, FTA, all will help India more. For example, I'll tell you that we were doing $10 million export of apparels. Bangladesh export was only 5 billion. Now Bangladesh export has gone to 40 billion, but still we are in the 15 billion because they have this as a LDL status, duty-free status for them. So for EU and Canada, they all the buyers buy 10% less than us. Same way, Vietnam, it was 3 billion. Now they're doing about 30 billion in apparel exports. And still we are in the 15, 16 billion. Again, because of they have the duty-free status to Europe. So definitely the CEPA and FTA, with now the pipelines are, UK is going to be signed immediately. Then actually Canada is waiting for UK and Australia to be signed, because even the Australian Trade Minister was saying that he was getting call every week that what is the position of the agreement with India. So they're all looking for that. After Australia, I think the UK will come, now Canada will come. Then once the UK is come, then we slowly will go for us, EU also. So definitely these agreements will help us to grow. And again, they were talking about this Ukraine war and all. See, the Ukraine war is already 50 days are over. But if you see the March export, we have crossed 40 billion. So that is not affected much. Actually, I believe in this Ukraine war will give more opportunity for India, because our export will increase to Russia, as well to other countries. Because so far it is not affected, because I was talking to all the exporters also. Their order book position is very good. So next year we may do, when the Honorable Minister asked me, I said we can easily fix a target of 25% more.
Wow.
So next year we'll be about 500 billion we can achieve. I'm very confident about it.
That's the big line coming in from FIO. We can increase the target by 25% more by next year. And you're right, especially in wheat exports, for example. In a sense, India's wheat exports have gone up because of the Russia-Ukraine war and the deficit caused thus far. But thank you so much to all of you for joining us on the show today and giving us a glimpse into what is behind India's export story, really turning positive and so showing this massive increase. One can only hope that this pace sustains. Thank you once again.
Thank you, Tamanna. Thank you very much.
Thank you.